Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Vick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Tuesday edition of Benzinga's Pre-Market Prep. Spencer Israel here with Dennis Dick and special co-host Nic Chahine, who will join us for the full hour today. On today's show, we're obviously going to lead with the earnings from yesterday. Netflix, after the bell, we had Goldman Sachs, we have Johnson & Johnson. So that'll lead the show, and we'll kind of work through the day's trades within the context of earnings, since that is sort of the driver of the morning. We'll, of course, take your questions from our chats, premarket.benzinga.com, youtube.com/Benzinga TV. Looking at the market this morning, we are trading down slightly in the S&P futures. Gold has come off the highs. We're at $12.39 right now. Oil, we are right at $68 in crude futures, and Bitcoin. Do we even care about Bitcoin still? Bitcoin, we're at 66.80, so down from the high of 67.65 overnight. Dennis, how's it going this morning?
Going busy earnings season here. So we're in a fast market all the time now on the trading floor here. At least where I'm at, it's a fast market here. And we got a special guest host again, but Joel's still on vacation. And it's Nic Chahine, and he's hiding in the background. And how are you doing, Nick?
I'm doing pretty good. Trying to read into this debacle overnight and see how convicted the traders are this morning, and see if they can shrug it off.
Spencer, let's jump into this. Where do you want to go? I think we should start with probably the big doggy of them all, the one that's down 50 points here this morning, the one that I had dead wrong 3 days ago. I'm glad I changed my thesis, as I was saying the last couple of days, as it got weak ahead of the report. That was kind of the tip-off for me that obviously, sellers, it was going to be a little bit of a different story than what I had thought a few days earlier. Netflix down 50 points. Give us the details.
Yeah, so the EPS and the sales don't matter as much, but I'll read you those anyway. The Q2 EPS 85 cents, that beat the 79-cent estimate. Sales 3.907 versus $3.94 billion. So mixed on the Q2 numbers. What matters the most, of course, is new subscribers. They missed their own guidance by about 1 million subscribers. 6.2 million was the estimate for last quarter. They only acquired 5.15 million new subscribers. Most of that weakness coming from a lack of growth internationally. And then their Q3 subscriber guidance was lower on a year-over-year basis by, what was the exact number there? I don't have the exact number in front of me, but the Q3 guidance, the Q3 subscriber guidance was lower on a year-over-year basis than Q3 last year. So weak subscriber growth. They did say on the call that it's not the first time this has happened. If you recall, 2016, I want to say, Q2, they missed subscribers that quarter as well. They never really quite figured out why they missed that quarter. I think what Reed Hastings was saying on the call is that this might just be a follow-through or a continuing of the idea that there's bumpiness in the road. They didn't subscribe any particular theory as to why they missed their subscriber growth last quarter. But, 5.15 million new subscribers is still pretty good, but the expectations are just so high.
The expectation is too high.
So high.
High. And I had that wrong. And I said 3 days ago, I thought that they could beat on those numbers, and I thought we could see 450 on it. And then the stock sold off for 3 days straight. I'm like, well, that scenario is off the table. And two reasons it's off the table. One, it was 20 points lower than it was heading into the number. Secondly, is that you now created a situation where you had a stock kicking around all-time highs. Now you create an overhead supply issue. So it's just an ugly candle. That's why I was saying on the show yesterday with Kenny, I would be selling if this thing bounces after earnings. I'd actually be selling it short. It did not give you a chance to sell it short on the bounce. It went straight down. So you can see right after the initial numbers, it literally just kaplooey, as Joel says, I say, from 400 down to 350. And now it's still just sitting down there. And it's going to be a tough bounce back. I mean, it's not like this just happened. It's traded the entire after-hour session, traded the entire pre-market session. They're hitting it, and they're hitting everything that's growth here this morning. So I think you're going to see a theme here this morning where you're going to see money come out of some of the growth stocks and go into some of the value names. That is what, we've seen this theme happen before. It's obviously cycles, and growth has been winning the battle here for the last few years. But even in between, you get some days where value trades start to come back into favor. I think we might see that theme. We've got Nic Chahine, though, here. He wants to comment on Netflix. I know he'll be talking. What are your thoughts here? First on Netflix, and secondly, what's the fallout going to look like from this?
So the Netflix story, one of my concerns with Netflix early on was that they completely discounted the competition. So this time around, they actually mentioned the competition, but not with a concern and not as a reason for the miss. So like you said, for some reason they missed. And I listened to a couple of experts and to the company itself, and they said kind of like the way we counted or the way we forecasted. So basically, it's a numbers game, and like you said, it's expectations. So the only thing that happened today, in my opinion, to the Netflix thesis that's ongoing is reset of expectation period, not reset of actual results or trajectory. So they still added a whole bunch of people, four something million, and a whole bunch of them are overseas. And that is the thesis, right? The global expansion. So nothing has changed in the underlying thesis of Netflix except the expectations of people that are trading it. And if you missed it on the way up, this is probably an opportunity to start nibbling.
You like looking, and when stocks get beat up and there's blood in the water, you like to sell your puts. Is this one you're willing to sell puts on, or is evaluation just too? You are. Are you going to be jumping here selling puts on Netflix today?
I most likely will be, and but pay attention to the fact that I don't sell short-term puts, so I'm not in the trenches.
And you go way out too.
I get way out, way below, and you can rest assured that I'll make enough buffer for another whoosh like this one before I am long it. So
you're not coming in right in the 350s. You'll be looking the 300s.
I don't have a number yet, so I'll have to look at the chart. I'll have to look at the premiums, but I can guarantee you the premiums are going to be hot because of the size of the drop and the headline.
You lick your chops when you see those premiums hot.
Yes, I did that with good names like the banks when they fell last before they just rallied. You and I were chatting offline, and I sold them into JP Morgan. I mean, how much better value can you do that to? And I was more aggressive than normal, and it paid. The puts, and I bought calls, and so the calls were up and the puts were up. But I can only do that with conviction. With Netflix, I have less conviction than say JP Morgan because of the value I'm selling into. But the story is still the same. So when you go along an aggressive growth stock, you don't look at profitability. And it's not there as far as value. So you look at the story itself, and the story is still the same as it was yesterday or the day before yesterday. The only difference is what people expect of it. They're still adding a lot of people. They're still growing their top and bottom line. I mean, what were the metrics? If you look at the metrics, they're probably up like 30, 40%. As far as performance, just flat out performance as far as growth is concerned. When that slows, then I worry.
Now, what about from a valuation perspective? And let's just take this over because I think there's going to be a fall here. And obviously, we're seeing a lot of sympathy moves. We're seeing some growth names get hit. Amazon was getting hit really hard. It's come back, actually. And if you look at FANG, it's actually bouncing back nicely here this morning. It's actually surprising to me. The S&Ps are holding up very well. The Russell's actually in the green. You can look, at the indices, and we're not getting hit that hard on Netflix being down 50 points. I mean, if you would have told me yesterday afternoon that the Netflix is going to be down 50 points and the S&Ps are only going to be down 5 handles or 6 handles, and that the Russell is going to be higher and a lot of other stocks actually starting to catch a bid, I'd say, well, that doesn't seem to make that much sense. But you start thinking about it, maybe it does make sense, because I think you could see a push, not the money coming out of the market altogether here, but the money now rotating again. And that's what we've seen, that's sustained this bull market basically for the last decade almost now, is that we always see rotation. We rarely see those days where everybody's getting the hell out of every stock no matter what. And I think you could see some of these value names, some beaten down names, and names that really haven't had a lot of love for the market start to catch a bid today. What are your thoughts here on a possible growth to value trade?
It'll be temporary. And the reason I'm not that worried is because the selling that I've seen has not been bears pressing the shorts. It's been bulls booking profits from point A and getting into something else. So the bulls are still in control. The bears had several opportunities, especially last week and the week before that and the week before that, to kill the bull, and they didn't. So the VIX spiked. It had technical upside potential that was horrendous for the bulls, and they just completely let it go. And so, yes, they're going to probably sell Netflix, but luckily that Netflix was a specific problem, and it's not necessarily translating into Google because of the way the Google growth comes versus the Netflix growth comes. So it's specific to them acquiring, to them counting and forecasting the actual new accounts that they're getting every quarter. So it's not like it's a systemic problem to tech in general. It was just specific for Netflix and in one area.
What about a stock like Disney? And Disney is just trading flat here this morning. It's actually had a nice run here the last few days. It's starting to look a little bit better, breaking out over 110. Do you think Disney continues to catch a bid here because Netflix showed some weakness?
Yes, and I don't know if we can share charts or not, but Disney, I actually sent out a positive note on Disney last couple of days, and it started out well. There's a technical upside there. And as far as where it goes, will probably depend on the market in general if it allows it to go there. But I do like it from a technical perspective. I'm not so sure about how it plays out. Let's see here, how it plays out from the fundamental perspective.
Well, from the short-term perspective, and we're a lot. We try to talk on the show. We try to talk short-term, and we try to talk long-term as well. Yeah. The long-term stuff is always tricky. I mean, I've always said in a joke, it's very hard for anybody to call this market out 2 years. It's hard to call it out 2 weeks. I think we do a pretty good job calling out a day or two, but, it's all rotation, reading the tea leaves there, but, it can be tricky. That's why I always like the way Nick plays it when he's playing a little longer term. He's not trying to call where the market's going. He's trying to call where it's not going. And that's why you're always, writing puts where you think these stocks are not going to. So it's an interesting, your strategy is very unique to where, most of the individuals and most of the people who come on our show are trying to make calls on where they think it's going. You just say, hey, this is going, this is really weak here now. I don't think it's going this low, and I'm willing to take a bet that it's not.
Yeah, it's the Disney long-term perspective. Obviously, they have awesome assets. There's nobody on the planet, anywhere on the planet that doesn't know Disney assets. And now the streaming thing coming, it's just a matter of them turning it on, and the content's going to be there. And I can guarantee you, every parent on the planet will have that, that has access to a smartphone, because it's a great babysitter to do your day-to-day thing. So, parents are always being pestered by their kids because, kids demand time. And if you can just appease them for a few minutes with a $5 a month subscription, whatever it is, it's going to be, I think it's not going to be them competing with Netflix. I think they can both exist.
There was a popular headline that went around, that got passed around over the weekend, that if this Fox deal goes through, that Disney will control 40% of the U.S. box office. So, yeah, the content is there.
Yeah. And also Hulu, right? They'll have access to Hulu of some sort. Is that part of the deal?
So
they will be the majority. They will be the majority owner of Hulu,
because they already own a piece of it, right? Fox owns another piece.
They all own pieces of it, and they're going to get Fox's piece, which would make them the majority owner.
Yeah. Anybody? Do you use Hulu? Have you ever been on there?
Yes, I do.
I used to watch.
What's
Hulu.
the difference? Because I just use Netflix. Like, how is Hulu different than Netflix?
I would say, first off, Hulu is the only streaming service that I myself actually pay for. I just mooch off of everyone else for Netflix and the like. But it's not different. It just has different shows and content.
Hulu has been around forever. I remember watching it in my office in like 2000 and I can't remember, 7.
Me too. And they had commercials online.
Yeah. And they had shows. I mean, I watched the first season of Justified before it was released on TV. It was like a Hulu. So I went to my office. I was like, hey, look at the show. It's awesome. And then the next year it comes on TV and I have to watch the whole season over again. So Hulu's been around forever. But they were trying to do this smart thing. So every day they were trying to tell me, here's what you need to watch. And it was pretty annoying because it was not as good as it is now, but they were trying to tell me what I think I would like. And I found a couple of British shows like that. It was okay, but it was a little annoying, and I had to turn that option off. And then they went to pay, and I ditched them because it wasn't worth it. There was not much I can watch on there. But I haven't been on there for a long time.
So let's jump over to a few other stocks that obviously report earnings. And Johnson & Johnson had a wild ride here this morning. I was actually long at going into the report. Reason I was long is I said to my buddy, I was like, I think if they do anything, if they can do anything, the stock is going to go higher. Just because it's a little more of a defensive name. This market wants to play defense, at least today. So I bought it last night just on the brink that I thought, maybe this is actually, if it can do anything, it's going to be okay. The earnings came out and they were okay, and then they lowered guidance, and I was like, well, maybe we're in trouble here. And the stock actually fell $4. But I was still looking at it. I was like, well, the guidance was just narrowed. It wasn't really lowered. The headlines are grabbing it and throwing it under the bus. So I was like, you know what? No, I'm going to hold on to this. And it actually did bounce all the way back and is now trading in the green. I've sold it now, actually, because when you take that much heat on a day trade and it goes all the way back, you're like, thanks, because it was a scary trade. But, my thesis did play out. It just was a lot of pain through the thesis. Spencer, give us details for J&J.
Yeah, like you said, beat on the earnings, questionable maybe on the guidance. The Q2
this has narrowed it. It wasn't really like the headlines were grabbing and they said lowered, and then I was reading and I was like, well, it doesn't really look lowered. Right. But anyways.
So Q2 EPS $2.10 versus $2.06. Sales $20.8 billion versus $20.37 billion. So beat and a beat. The fiscal year 18 EPS was reflected an increase in expected operational growth of about 5%. So that came in slightly lower than the estimate, but not by much, only by about $1 billion. 80 to 81 billion is the range that they gave, and the expectation was in the mid 80s. The same thing with the fiscal year adjusted EPS. So yeah, it was narrowed, and it was just reflecting an increase in operational growth.
And it was a wild trade. Came into support. Go ahead, Nick. I was going to say.
No, I was like, all I hear is blah, 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 blah. They're doing just fine. That's all I hear, because this is J&J for crying out loud. So anyway, go ahead. Sorry,
just J&J down $3.50. When you see one of these, stocks, that's pretty defensive. I mean, think about the last time we saw a $3.50 move in J&J. What was the expectations going in on the options, Nick? Do you have that from yesterday? Like, what was the straddle going for?
I didn't look at it, but I can see if it's still available. I'll peek at it. But I did go long J&J, and I exited before the earnings. So okay. I had a nice win in there. I had enough longs. I was like, I want out, and I booked my profit. So, but as far as expectation, I think they were pricing it about $3.20 plus or minus.
Oh, okay, well they weren't. Actually, that's a lot. That's more than I would have thought.
It is a lot to what you would think for a stable stock like this one. But it's not a big premium as far as implied volatility to their 30-day average. So it's not crazy a lot, but it is. You'd expect a more quiet market in a stock that it's not like it's looking for subscriber growth or anything like this.
I think we've seen the bulk of the move here in J&J. It's already quieted down here a lot. So, you've seen that whoosh. I think 121, 122, 123 is probably off the table. Probably is going to meander here between like 124 and 127. I think if you're hoping it gets back down to 121, I don't think you're going to get that shot there again.
Before we go any further with everything, I sound pretty bullish all the time recently, but that's because the fundamentals deserve it. But I do have reasons to be worried a little bit for the short term because of fear, right? You look at fear, and just from a technical basis, what's been going on, it's been repetitive since the February correction. So it could catch a swing bid as far as the VIX, VXX. I haven't been watching the VIX much. I'm looking at the VIX futures and the VXX just because the VIX is acting weird. And this is at a point where it was the lowest before we had a little tizzy in the market. So maybe if I have longs, I book some or I take some protection somehow. And when I say take protection, I don't mean just buy the VIX. I mean, I protect usually where I have risk. So if I have a lot of tech, I buy some puts in the Qs. If I have a lot of industrial stuff, I'll buy puts in the Dow, and the DIA is probably the easiest one to trade that way. So
Let's jump over to the big doggy in the financials from this morning, and it's Goldman Sachs. It's trading down just slightly here. It has been a wild ride for Goldman here too. Spencer, give us the details.
Goldman Sachs Q2 EPS $5.98 versus a $4.58 estimate. Sales 9.4 versus 8.63 billion. So a beat on the top and the bottom. They also made the news official. They are naming a new CEO. David Solomon will become the CEO October 1st. That news was originally reported over the weekend.
It's like Groundhog Day around here. Goldman Sachs seems to always blow the numbers away, get an initial pop, and then drop. And then we've done it here again. You know, it got up to almost 235 here right on the initial pop, and now it's pulled back here. Full disclosure, I do have a long Goldman Sachs position on, but it's hedged against XLF and some other banks. So net, I'm probably just I'm net really on the financials. I'm probably on a neutral trade, a market neutral trade, because I do have the hedging going on. But Goldman Sachs here, wild ride. It went down to almost 228 too. So we've seen about a 7-point range here in early after hours or pre-market action on this news. But you know what? It's this one I just think they're going to buy too, because the banks all of a sudden came back in favor, especially yesterday. And you can thank Bank of America for that. Had a nice candle. We got a really good rally, brought up all the banks. Now you get a pullback here in Goldman. I think they're going to come in here and buy it too. So I think Goldman goes green today. What are your thoughts, Nick?
I agree with you. I just posted a chart. Technically, it has all the reasons to go up higher. It has set higher lows. And if this dip today, what was the low this morning? 220?
228 and change.
Okay, so even with that, it'll be a higher low. And it's setting lower highs and higher lows, and it's coming to a point, and it's a quality stock with no reason to sell it. If the market in general, that's a big if, settles down and shrugs this Netflix malaise this morning, then you're right. I think Goldman Sachs could finally break out of this descending lower high trend.
And it's trying to come back to flat here right now. So I'm still long my Goldman. Again, I'm hedged though, so don't think I'm long totally because it's a hedge trade. Jump over here. Spencer, a lot of earnings here. UNH was a big one. It's trading down $5 here. Give us the numbers for UNH.
UNH Q2 adjusted EPS $3.14 versus $3.03. That's a beat. Sales 56.1, which is $1 billion, which is in line with the estimate. They also raised their fiscal year EPS outlook by about 70 cents on the low end of their range from 11.80 to 12.50, and that is the numbers on UNH.
Nick, what's your thoughts here? This is a stock that was close to the highs, pulled back $5 here. Not getting hit too hard though. Numbers weren't that bad. The stock's been unbelievable when you look at a long-term, chart of this. Go back to 2013, this was $50. 2015, it's $100. 2017, it's $150. It just quietly gains $50 every couple of years. Well, the last couple of years going to be better. $250 here. Is it getting like eventually you think it's not just going to go up $50 a year forever? What are your thoughts here, UNH, just going forward and, short term here? What are you seeing in the charts?
It reminds me of something like Adobe, up and away, or Boeing. Every dip is buyable. So I don't know if $5 is a worthy dip for me to buy it, but if somebody that knows the stock, they want to, does it have any exposure to the Trump wrath that's supposed to be coming as far as pricing? I'm not sure how they line up. I think they're in the 20 PEs. So they're not bloated. So yes, the chart is from the lower left to the upper right. So they say, but it's not bloated. So the value is moved up with it. You have to do your homework. Technically, it's not a huge dip that I want to buy personally, but if somebody that knows the stock thinks it's an opportunity, then the chart obviously shows pretty good things.
And if you just want to continue the earnings parade here, we got a few other ones. Do you want to do Schwab? Is Schwab reported yet? I'm waiting on SHW.
I didn't see them last time I checked. Let's see.
Sometimes they're 8:30.
Yeah, I think they're 8:30.
I've seen Schwab come on a little bit later. You also had CMA on the schedule here today. And then you've had PGR too. Did you see some of the chart, Nick? You like?
Yeah. Schwab better hold that neckline. Otherwise, 46 and a half.
What's happened to the retail brokers here? Because, this is a good point. We don't talk about them that much on the show. And if we look at Schwab, it's been beat up here. Interactive Brokers has been pretty much annihilated. I mean, from $80 down to $60. It's really had an ugly month and a half here. Look at the other one, too. E-Trade Financial starting to look a little bit ugly on the charts there, too. Thoughts here on the retail brokers? Nick, what's going on?
I don't know their fundamentals. I don't know how they could not be doing
Oh,
well.
we should know their fundamentals.
I'm spending a ton of money. So, seriously, I don't know. I mean, more people are trading online, so I don't know what's going on there. Are they impacted by rates at all? I'm not sure how that plays into their P&L, but
maybe they just got overdone. I mean, you look at Interactive Brokers, they ran from $30 in April 2017 up to 80. Maybe it's just a healthy correction down to 60.
Well,
maybe this is the time we should be writing puts, Nick.
Well, Charles, I mean, I'm looking at it. It's defended the neckline that's above 48.5-ish to 50, which has been the bounce level of late on 3 different occasions, and this is the 4th one on a double bounce on it. If it holds, it should swing higher. If that's what's what's happening, and it's going to continue to happen. So this is the range you want to trade. So yeah, it could be an entry point. Depends on how they react today.
And remember when we had that crazy day in February, all the retail brokers came out and said that was their best day ever in terms of trading volume and fees acquired. So yeah, maybe they just got overdone after that. I don't know, but I remember them all saying, coming out with PRs that they had their best trading day ever. So
yeah, just funny because the market's been going straight up. We know financials have been weak overall, but these aren't really banks. I mean, no, but banks that have been weak.
They have the same pattern. I just looked at Schwab and E-Trade, which I don't usually look at. They both look like a head and shoulder-ish because they're bouncing on a platform. But the difference is that the E-Trade one is it's not as stable as Schwab. Schwab has had a flattish wide range for longer than E-Trade has, which has had a steeper ramp, but now is bouncing at the top of the ramp with a head and shoulder from 427-ish time. So it's at risk more than Schwab. So if I were to sell puts, I'd be selling in Schwab. Not knowing either of the fundamentals, I'll have to do homework there. But that would be my one observation between these two that you noted here. Fundamentally speaking, I don't know. Oh, price to earnings, they're almost comparable. So
what's the PEs on those things?
Low 20s, and this is trailing PE. So actual 12 months, trailing 12 months results.
Interesting. So it was interesting because they've been beat up and I didn't notice it either there. Yeah. So,
but the big question is, before I buy anything the next couple of days, is how this is going to play out with the fear being so low and a spike a little bit today. So are they going to start a swing higher, or just going to be a spike and let go over the next couple of days when we get something good to trade?
Let's talk, and let's take it a little more political here. I mean, everybody was talking about Trump yesterday, and obviously they were talking treasonous. And I looked at it, I watched the video, what he was saying, and I get it. I get the argument that, he really kind of threw America under the bus and the intelligence agency there with his speech there with Putin. But, the other thing being said, though, what was he going to say? I mean, he's not going to, if he goes and says, yeah, it was rigged, then he's kind of, killing his own goose there too. He was kind of stuck. He can't, just say, oh yeah, you guys rigged the election and I shouldn't be president. So I don't know what the media really wanted him to say.
Such a hotly debated topic. I mean, I fall on the wrong side with it with my family, and I just had the debate with them. I was like, I haven't seen so much hate for a person that you don't know in forever. And yesterday was like a national hate day on every expert I saw.
Everyone hated him.
Was completely, the note was like, I can't believe he's doing this. I was like, this is not the worst thing he's done. I don't know why you've seen him do something more flamboyant.
That's what I'm saying. If you're still surprised now, where have you been for 2 years?
I know, seriously, this was like that's not news. I mean, the news was ratcheting it up to 500 billion 2 weeks ago as far as tariffs are concerned. That was news. Basically, he threw the whole pot in. He dialed the rhetoric up to maximum against China. He couldn't dial it up more. We don't import more than that. He said 500 billion. Boom, that's it. And then 200 billion when it actually came out with a list. I was like, that's good news. He said 500. This is 200. So yeah, nothing surprises me there. But we'll see. What comes out of all of this. As far as Russia being able to hack or influence our elections, I see maybe the message of what's going on there. Shame on us to let it happen. I just can't see myself falling for that trap. First of all, if I read it on Facebook, that doesn't make it true, and it's not going to make me vote one way or another. So onus falls on us, the voters, not on whoever can influence our minds.
Well, they put him in. I mean, they put him in there. You knew what this he's not a politician, so he's not going to be as well spoken, obviously, as Obama or Bill Clinton. That was never going to happen. He's not well spoken. So he is going to look foolish sometimes with what he's saying because he's winging so much too. I mean, he's up there, and you think a lot of this stuff is probably written and scripted to a certain extent. I feel like he wings a lot of this stuff.
He has to wing a lot because he's tackling a lot. He's picking on this guy and that person and this person and this topic and that topic. I mean, you have so many minutes. You can't study everything if you want to attack all of this stuff. He's definitely winging
what he's trying to do. We're in trade wars. He's trying to smooth over. He smoothed it over with North Korea. He's trying to smooth over with Russia, I guess, to the dismay of everybody.
I thought he missed an opportunity when he went to Theresa May. He should have hammered out a written deal with them, because then he could have made it, if you guys do your Brexit thing the way you say you're going to, kind of like a big if to start the whole thing, so it wouldn't be set in stone. But here's the plan for you guys in the US. And it would have served as the template for a whole bunch of other people we're fighting with over tariff. And maybe that would have just said, hey, I'm not crazy. I'm actually have an end point, and here's what it could look like. And look how beautiful it is, like 0 taxes back and forth or 2% back and forth, whatever it is. The deal is he could have used it as a template because it's one, and it's a good partner, and it's someone that's on the outs with its partners. So it would have been perfect, I thought, to say, okay, here's the deal. You guys, once you get out, this is what's waiting for you. He did kind of commit to it that, okay, we will be trading, but it wasn't official. If he had made it official, then it could have served as a template to go forward with the other guys. So is Goldman bouncing? Because I'm looking at the Dow and it
has. Goldman has come back up slightly. It's back in the green here. Dennis Sticker, bullish Goldman. We better go out and buy it.
Right
bye.
Hey, Dennis,
with our audience.
Dennis, your stock IQ announced an acquisition this morning.
What are they buying? What are they buying?
Sky Moons. They bought it.
What is Sky Moons?
I don't know what they do.
What is Sky Moons?
I don't know what they do, but they paid 1.27 billion won, I guess.
It's money.
That's not a lot.
I don't know what the won is compared to.
I don't know.
Sounds big when you say billion, but I guess
100 slash by 100. I don't know. So yeah, IQ. I closed some sold puts yesterday. Believe it or not, I sold puts in IQ because
You're wild, Nick. You sound puts in IQ.
I have enough profits to cover the whole loss. So
I got you. So this wasn't one you're just going like, oh, this is a valuation call, and I'm confident IQ can't trade at like $25.
And guess what? I'll probably sell them back out at down 5% today.
So this is more of a
plus
trade.
IQ is down probably more so because of, if you look at the chart for IQ overnight, it fell with the headline on Netflix because it is the Netflix of China. So they kind on froth, perceived froth, I should say, not that Amazon is froth, but if you lay the Amazon chart over IQ, I bet you anything it'll correlate pretty nicely there, because it's a risky trade and it's one that somebody that wants to bet on China, they can do that.
We were talking IQ. We might as well talk the other ones there too. I'm just looking at the chart. I mean, these things have broken out. So I think still on pullbacks, there's going to be some buyers below, people who were not the first time. Now it looks like it's trying to make another run at it again. So I'm actually be a buyer of dips on IQ. I said that a couple days ago. I'm going to continue on that theme. HUYA trades with it. It's kind of been the leader. It's just been meandering for a couple of days here.
Yeah.
Also, SOGO is one that we talk about. That's kind of starting to form some bids there too. These are stocks that I probably would be buying on pullbacks.
Yeah, I'm in HUIA. Don't ask me what they do. It's one of those leap of faith I took, and I have a good entry point. I'm not going to get out of it. It's in longer dated calls, and they're green, so I'm just going to let it run and see what happens to that.
And then also BILI was the other one that we talked about there too. And it hasn't run as far as the other. It's still just hanging out in the low 13s. So a little concerning if you're BILI because, these things have all traded together. And it's one that really hasn't participated at all in the recent rally. Maybe it's going to play a catch-up trade or maybe, the poor relative strength. There's other sellers for other reasons. What are your thoughts? Just, let's just take it on a tangent here. When you're watching stocks that all trade together, and then all of a sudden, one doesn't participate. Is that concerning to you, or do you look at it as, it's going to catch up?
I don't like to buy the laggards, if that's what you're asking.
Yeah, that's what I'm asking.
Because the laggards are the laggards for a reason that I probably don't know. So
gotcha.
I'd rather play with the ones that are working and that I can predict. So if I like the sector and somebody's lagging, there's probably a reason why. And unless I know something the other people don't, I assume that I don't know any better than the other people. So they all are, I don't know about the rest. The first couple at least were Chinese. And the China stock market has been in correction, actually bear market territory, 20% down from the high, I believe. And they haven't recovered. So maybe they catch a bid if and when that trade flips. The FXI is probably best represented there.
And we got a lot of questions coming from the chat, so let's go address some of these here. Jazz, we're going to come back to UAL, CSX, but I want to go to the Amazon question there from Buy Apple. What's your strategy on Amazon earnings, Nick, compared to now that Netflix got slaughtered on their earnings? What are your thoughts here on Amazon going into the... Can you find out when Amazon reports? Because I know it's coming, but I don't have the date in front of me either.
Amazon.
Do you know, Nick?
Okay.
Amazon.
I don't know the exact date.
I can
No.
Spencer will grab it right now.
It is the 26th. What day of the week is that? That's next Thursday, after the bell.
A week,
Great.
or just over a week away. What are your thoughts here now on Amazon?
Okay, so when was it when I told you it'll be 2000 this year? I was on your show. So it's 6 days like yesterday away from 2000. Here's my point, first of all, about any earnings report ever of all time. The short-term reaction has nothing, absolutely zero, nothing to do with their actual results. We don't know what they're going to say. If they give me the P&L, I couldn't tell you how the market's going to react to it. So it's a short-term, it's a complete coin flip. Anybody that tells you they know how it's going to move is wrong. Now, I publish usually the ranges, and those are almost always exact. But I couldn't tell you if it's going to go that way, up or down. But I can tell you if it goes up, it's going to go to here and then there. And if it goes down, it's going to go here and then there. But to tell you which way it's going to go, I don't know. So if your thesis on Amazon is bullish, then whatever I do to Amazon, I do it longer term. So if I'm buying calls, I'll buy them. I leave myself time. If I'm selling puts, I definitely don't sell them puts close to the money. I never try to do iron condors around the earnings. I know a lot of experts do, but you have to be really an expert with deep pocket to withstand a lot of drawdowns because they happen. I can guarantee you no one that sold an iron condor yesterday on Netflix is happy this morning. So short term, I don't know.
Can you just explain iron condor just to some of our listeners who may be not familiar with the terminology?
Sure. Iron condor is when you sell risk on both ends. So if you say, okay, I'm going to try to scalp some income from Netflix. So you sell a put spread, which is a bullish, and you take in some money as far as risk for that. And you take it down below a level where you think it's going to go. And hopefully the stock, if they fall, they don't fall through your spread, then you keep the money. Otherwise, you owe some money back, and it's usually more than what you took in. And you do the opposite thing on the upper end, and hopefully you pick a wide enough range to where price moves inside your range, and you end up keeping both sides. Now, if price goes to zero, you lose a lot, and if price goes to 1 million, you lose a lot. And yesterday, price went down enough to I don't think any iron condors actually made money.
Okay, more questions coming from here. Bull for Trade wants to know, do you hold trades through earnings or do you typically get out before the report?
If I have a lot of time on the clock, I hold them. For example, Micron, I was short puts. I don't mind holding them if they're at the level of 40 when the stock is trading so much higher and the stock is valued as like 5 PE. So yeah, bring it to 40, I'll own it. So that is one way. If I had a lot of profits in naked call position volume, if I bought calls, I tend to either book it, spread it somehow, or resituate it to where I book it and I play with house money.
And Iceman wants to know about Vega. Well, let's go, check out in the chat. I can just read it to you. Nick, do you worry about Vega with longer dated calls in a stock like HUYA?
I don't.
Do you look at Vega? What are your thoughts?
I don't, because I'm a Main Street guy and I keep it simple. And my promise to my people is we won't talk Greek. So it's all in plain, simple English.
Nice.
And if I can't, if I don't want to worry about it, I mean, it's not smart if you want to scalp this and that to not worry about it, but it works for me to where I don't need to. What I worry about is the odds of success. So here's how I look at options in the simple way. If somebody looks at it, well, I've got a 60% chance of success. So it's like, to me, that's unacceptable. That's a coin flip. 50 is a coin flip. It's Vegas. You go down, you put it on red, you flip it even or odd. There's no edge for me at 50% or 60% or even 70%. So pick your level of comfort to where you take a position that gives you an X% chance of success, and then manage that percentage. So for me, if I'm selling risk, I usually want to start out at a 90% odds of success. So I'm way out there on the bell curve, if you know what that is. So, and then as that percentage starts dropping, if the price is moving against me, it hits a level that makes me nervous. My level of nervousness is 70, and then I start to think defense. So yeah, I don't worry much about, obviously my strategy includes Vega and all of that stuff, but intuitively so. But what drives my decision levels is usually what are my odds of winning and what's my thesis? Is it still alive?
Questions is popping in for me like crazy from the chat, so I like this. So we're going to just continue the Q&A with Nic Chahine here, talking spicy. 50%, so you get up, so much in your option. Do you take some automatically off the table? Do you run? How do you manage the winners? I mean, the losers are sometimes easier to manage than the winners. I've always had trouble managing longer term positions because when do you take the profit? I'm always one that probably takes it too soon. It's scalper blood in me. What are your thoughts here, Nick, on how to manage winners?
I get out earlier than most people just because I've been bit before, and I'd rather miss out on some upside than to leave the whole trade goes red. Perfect example, yesterday I was long JP Morgan in two ways. I had sold puts and bought calls, and when it spiked, I closed the calls, booked that profit, and left the puts running. Why? Because it fits my schedule this time. Because I'm going on vacation, I don't want to have to worry about when do I exit the puts. I know I can rely on the call. When do I exit the calls? I can rely on the puts working for me as long as JP Morgan doesn't crash. So I let the time do the work for me that way. So I have exited trades too soon and left a lot of money on the table. But I usually goes, too bad I did that, but it doesn't break my heart.
Someone else know, do you ever play stocks? I want to know this question too, because you're almost always options. Do you ever go in, to get down dirty in the actual stock itself, or are you always playing it through options?
I don't do stocks anymore.
You're always through options. I guess you know what you can manage your risk better. Well, why is that? Just leverage, or
it just takes
better? Why is it?
I risk less to make more in percentage terms. So
who says that? Dan Nathan or something on one of those options guys says that on.
I think it's their tagline.
Oh, it's their tagline. Yeah, the CNBC.
Yeah. But options, to me, it's I risk less in absolute terms, like money out of pocket. Yeah. And I gain more in relative terms. So look at any stock that bounces in a day. If they're up 5%, I think the other day there was a stock that I posted it on Twitter. I said, up 5% is good, but up 50% or 100% or 1,000% in the options on the same day is much gooder. So I have more control, but you can lose a lot faster. When you buy a stock and you hold it over time and it's a value, then it's an asset that doesn't deplete with time. The problem is people get gung-ho chasing options and they end up holding an asset that depletes with time. That's the danger of options. They're less dangerous from money out of pocket perspective because I'm not shedding out 50 grand to own Apple. Right. I'm spending a couple of $100 or $500 or $1,000, $2,000. But the difference is the Apple asset as far as stock is an asset that doesn't fall with time just by time ticking, whereas the calls are. That's why I prefer selling when I have intelligence. So if I have good fundamentals and I have good conviction in my trade, I would rather sell the options, whatever they are, than to actually buy the calls and hope for it.
Nic, now, and this is a concern, and this happens with some traders. I know you manage your risk very well, but I've seen some options traders where they think, okay, yeah, I'm risking here, but when you start writing options, you're risking a lot more. Like when you're writing a put, and people write naked puts. I see this stuff all the time, like flat out. Like I know you do it too. Sometimes you cover yourself by buying a lower put, but you see people come in, they write this put, write this put, write this put. All of a sudden, the market goes into a 10% downturn. Yep. And they are getting put all these stocks they can't afford to own, and all of a sudden they're getting margin called, and they're getting the options sold on them, and they're just in a complete mess there. How do you manage that risk effectively and not get yourself into a situation where if the market goes into a 10% downturn, all of a sudden you're not getting put all this stock that maybe you don't want?
So first of all, the one caveat that I usually put when write down when I'm selling puts is, I don't ever sell a put I don't want to own. I'm not able or I don't want to own. So if I can't buy it, I don't sell it. And if I don't want to own it, I don't sell it naked. I'll do a spread, a bull put spread, credit put spread, whatever you call it. So if I sell a put, I'll buy one. Now, sometimes if I sell a put, for example, Micron at 40, when one day somebody wrote it down and said it was going to fall to 35, and the stock took a tumble because one analyst's opinion, I thought to myself, it's already at 6 PE or whatever it was, 7 or 6. What's the downside? What's the worst that can happen? Okay, it falls to 35. I said, I'll own it at 40, and I sold those puts. And but if I wanted to cover myself through a period of time, let's say I'm going on vacation through August, I can buy an August put for the same level or a little bit higher to protect myself. So if the market crashes, then it goes through 40 and I'm put the stock through August, I'm protected. So it kind of gives me it's like selling a calendar spread versus buying it. And it's not 100% protection because after August, I'm back to being naked the short put, but I'll probably take it off by then. So that's just one example. So yes, I don't sell the put unless I am able and willing to own the shares.
Okay, so then let's say it's a scenario where you all of a sudden own the shares because you don't like to play stocks at all. Yeah. What do you do with those shares? Are you like
it all depends.
How often do you get put something?
I can't remember the last time, but I do remember what it was. It was Suncor. And
what did you do with that?
Well, it was a Friday and it closed like pennies in the money. So I woke up owning 1,000 shares of Suncor, and the stock was up $1. Yeah, and so I sold it and I made more money. I kept my premium. I owned the shares for a few hours, and in the morning when the market opened, I just got out of it.
Now you're going to get into a situation where you are obviously going to get put stocks again, and we can't. This is just interesting to me because we don't have you on the show this long. It's just to break it. How many like open put positions would you have at any given time? Like you've got written puts going on stocks. Like how many different stocks would you have written puts on right now? Like just ballpark it, if you don't mind. Asking.
I have more than I want right now.
More than I want.
And
if you're uncomfortable answering anything, just let me
know.
No,
I have too many. It's over a dozen, and I don't want that many at the same time. I would rather have 6 big ones.
Okay.
But I don't, because I'm helping out people, and I want to put my skin in the game where I believe in it. So I end up joining them just for, hey, I'm in it too, kind of a thing. But they're not like the sheer dollar amount is not twice more than I want. So I dial the amount back in order to participate. So for example, Lam Research, I was short some put because it was beat down to heck. And I don't see why. And I took half of it off. So now I only have a small position.
So
there.
You will take a loser on those options if
it wasn't a loser, it was a winner. So
will you take losers on the options?
Oh yeah. Oh, absolutely. So
you are managing, like if my thesis
is broken, I will get out, lick my wounds and get out. So I will manage out of it. And there are ways to manage out of it. So, and sometimes I've sold a put and then they report and back to answering that one person's question to what do you do through earnings? So one time I was short puts at Twilio at 25 and it crashed 25% down on the earnings. Not this earning, like, I don't know, 5 or 6 earnings ago. You can see it on the chart. And luckily, I had bought 5-cent protection over the week at the same level. And so I was completely covered. So if they had assigned them to me, I would have been fine. I ended up making money on the trade just because of those 5 cents turned into dollars. So it totally offset my losses. And I stuck with it. And then the stock bounced back. So I didn't even need the protection. I just cashed it in. So that's how I protect myself through the earnings. Otherwise, if I would have closed it, I don't want a stock like Twilio on my books through earnings.
Right.
I'd be okay doing it for Apple because I know the value in Apple, but I don't know the value in Twilio at the time. So yeah, I do have a lot of trades open, but I dial back the amount of risk as far as sheer dollar amount to keep it.
Are you calculating, like, obviously you can look at risk,
not
and
to the penny,
the options, but you calculate like what you could get put in a crash scenario. Market crashes 30% tomorrow.
Yeah.
Are you like Black Swan protected somehow?
Yeah, I do have enough protection to where I can sleep well. So if you don't do that, you should do that. And if you're nauseous when you see the number, you're too long or too short or whatever, too one-sided. So you should always check and see what's the worst that can happen. Imagine that, and then see if you're okay with the outcome. If you're not, then you should put something into play to protect you. The easy way is just, if I'm going on vacation and I know I'm not going to be able to access, I just buy out in time puts to protect me. I mean, it's sacrificed money, but it's insurance. Like, if I know I'm going to go race my car and somebody will sell me insurance for it, heck, I'll buy it. I know I'm going to throw it down the tube, but at least I can race my car with knowing I'm protecting the disaster scenario. So yeah, so if I was short Oracle puts and long calls, I dial it back one way or another if I want to open something else that kind of looks like Oracle. So yeah, I have too many, and I trim back. So I got caught a little long into Netflix as far as lottery ticket yesterday. And I got a phone call right at the buzzer, and I picked it up. I shouldn't have. I wanted to do a calendar, so it would have lessened the pain. But overall, it's not that big as a disaster. It's just a lottery ticket. So we'll see what happens with that. So yeah, don't overextend yourself. And I choose my entry points if they're in size. They're usually on conviction.
Spencer, I want to take it over to you. Did we just get Charles Schwab earnings? Because I just looked at Schwab exploding in my filter there. Schwab just ran up 3%.
We did get Charles Schwab earnings. The Q2 EPS 60 cents, beat the estimate by 2 cents, and the sales 2.486 versus 2.49. So in line with the Q2 numbers for Charles Schwab.
So it is what, $52 now?
52.70 it just ran to. So it's starting to run up here a little bit in the pre-market. It's over that 52. I see that double top that you were looking at from a couple of days ago. We're trading well over that right now, 52.80. But again, this is initial just spike. So sometimes these things spike up and give it back. It's always difficult to say confidently that something's going up when it's only trading 9,000 shares. So we're just after the earnings report here. So obviously still digesting the report.
Yep, I lost my charting capabilities, but I posted a chart of Schwab earlier, and there could be some sort of an opportunity here in short term where they bounced off of a floor and they have a small neckline above, so they can probably carry that forward. I don't know much about their fundamentals, though. You'll have to do homework there.
Let's look at some of the stocks that are due to report after the bell. And we kind of looked at one already with Interactive Brokers, but a few other that are due to report later today. Let's start with UAL.
Full disclosure, I've got a long position UAL. You know how I like to play them ahead of the report. So I've always played this strategy, Dick, for years, where I buy stocks off in a couple days before they report, sell them right before the report. So just trying to extract the alpha of people getting excited ahead of the report.
That works great for Apple, by the way. I've done it for years. So,
make sure I always do it on Apple, you're telling me.
Well, they usually buy it into the earnings.
I often buy Apple before the events too. Like I'll buy 2 days before they have an iPhone event or something else too. It always seems like they run up ahead of them. It's after, like you said, it's a coin flip on the event itself. So I don't like to hold through the event, but the day or two before, I think there's good alpha they're extracting that. If you're going long, right before events, but getting out before the actual event.
So we were talking UAL. This is a stock I have traded before. It concerned me if it lost a 68 level. It looks head and shoulder-ish, then it'll bring 66 minus into view. But it's not a forecast. This is just something I have to be aware of if I wanted to sell puts in it or put spreads. So it's, I like the airlines. I don't like oil being this high. And I kind of saw the fact that the oil might fall. And hopefully the little dip in oil will help the airline story. But they might say something like, oh my gosh, given the high oil, we expect milder P&Ls going forward. So I'm afraid of the guidance.
And then also reporting after the bell, we're going to get Rail CSX. I'm long that one too. Again, it's a long earnings ahead of the reports there. It didn't work well yesterday. We'll see if that can reverse there today. But $64 were closed. It's trading flat, hasn't really traded at all. You can see 35,000 shares trade off exchange, which was just a cross from probably the night before, or maybe even in pre-market, somebody just two institutions crossing at the close. So there's really been no trades here on CSX today. Thoughts here on this one, at least from a technical?
Well, the technical perspective, it looks kind of short term. It looks like the airline stock. So I guess you could take a blanket trade on both of them and buy the transports. So what is that? The IYT. See what's in there. I'm not too excited about it. They're all like bouncing on a level that they need to hold. So if that level gives way, and if the market in general gives way, the whole segment is in danger there. So fundamentally, I don't know about. I think CSX in the 20s as far as PE, and I talk PEs when it's a stock that actually is worth talking about PE. Like I don't talk PEs on Amazon or any other growth stock, but in this case where it matters at what point you actually go long with relative to its value. So the IYT, the transportation, has to bounce over 184 or go below 176 if that fails. And it looks like the other two stocks which you just looked at are in the same boat, same style of chart. So be careful.
Spencer, let's jump over to ratings here. I didn't rate any of them down. I know there was a few here of interest, though. Can you just go to the ratings calendar and see what you see that is striking your fancy?
A couple that caught my eye. Cowen upgrading a pair of an alcohol stocks. QSR and Brown-Forman both getting upgraded to outperform this morning at Cowen. We did have an upgrade from Netflix, actually. It's Stifel, upgrade to buy, and BMO Capital upgrading them to outperform. That was surprising to see this morning.
Couple analysts buying the dip.
Yep. As far
defending their positions.
That too.
And then Netflix, same thing on the downgrades, though. Call one from Deutsche Bank, buy to hold. No other. Oh, Intel caught a downgrade this morning from Evercore to neutral. Or as they say, in line, and those were the biggest ones that I saw.
Let's talk Intel. It's been a while since we talked it. It's obviously sold off. It's come back. Valuation is reasonable on this. Got a 2.34% dividend as well. It's trade down 80 cents of the pre-market at 51.20. Is this one you'd be writing puts on, Nick? Intel?
I just closed the position, and I'm trying to remember what the heck it was. So, yes, I would, because I just had it. And I just recently closed it. So the idea, it was a January put. I think it was at 40, and I collected 90 cents to open, I think. And I bought it back about 50 cents. So it was a scalp. I didn't want to mess with it. And I forget the timing. I think I opened it on the 27th. So it was a quick in and out with Intel. But it's one of those where I know there's value, I know the chart, and I sold the puts where I thought there was going to be value caught, and then I got out of it as soon as I got some money out of it. So I didn't marry it. Some people will be tempted to squeeze every penny out of their trade. I'm not that guy. I don't mind leaving money on the table because hindsight, it's worked out in my favor that way more often than the other way around. Or at least I don't get my feelings hurt as much by
$153,000 to sell. I want to touch on that one in a second. BABA, $48,000 to sell. Wells Fargo, $40,000 to sell. Bank of America, $55,000 to buy. Those going opposite directions. Coke, $39,000 to sell. I mean, these are all pretty small. MO, $48,000 to sell. I don't see really anything jumping out at me. I want to talk GE with you. Just close with this one because this is a stock that has just been hanging out and doing nothing, it seems like, for the last week anyways. We were popped and then we dropped, now we popped again. We've been struggling here at 14. What are your thoughts here on General Electric?
I'm not sure you can say GE, this is a stock. It's no longer the stock it was a few months ago. So I don't know anything about GE. I can tell you, it has a bottom for now, but the bottom could give way. So if I'm a little concerned about the whole market this morning, just because from the fact that the fear was so low yesterday. I don't know where it's going to open today and see what happens with that. 31, 32 on the VXX. So we'll see where that takes us. Fundamentally, we still have a good story. GE is part of it, but if the market is vulnerable, then that bottom in GE is not going to hold up. But it's I don't know anything about it anymore.
All right, that's going to be it for us today. Thank you to Nic Chahine, who joined us for the full hour today. He will join us again next Tuesday. Nic is the author of Create Income with Option Spreads. You can find that by Googling those exact words. He's got a service on MarketFi. Nic, great job today. Thank you so much. Thanks to all of you who joined us in our chat rooms on youtube.com/Benzinga TV and premarket.benzinga.com. Our guest tomorrow will be joined by Chris Versace of Tematica Research. He'll join the show at 8:35. Have a good day, everyone. We will see you folks on Wednesday.